Alright, shorting inside of the order block with the fair value gap. Risk comes off if we manage to displace underneath the short-term low here. And again, I'll be treating this down close candle as a bearish breaker. Stop loss above these two consecutive up close candles. Again, seeing that as a bearish order block. The high of this candle comes in at 693.25. I want to see a lot of speed underneath here. Okay, my thought process is everybody's making money going long, trailing their stop losses underneath this low, this short-term low here. And then since the beginning of the stream, I favored opening range sell side, which is your original consolidation of the market maker buy model. Alright, so I'm looking to see if we can blast through this. I want a lot of speed underneath this low. I don't want to see us take out this low and play around. This is when I expect large, fast, down close candles to rip through this. I'm watching the breaker. So we have a high, low, higher high, last down close candle in between your two highs. I'm watching this entire candle, but more specifically mean threshold. And I want to see if we can stay in the lower half of it and take us into the sell side. And then again, stop loss is staying here until we get a nice displacement underneath this low. If we rip through it with a lot of speed, then I'll feel comfortable taking off my risk. Until then, I'm leaving it where it's at. Alright, just tagged it. Now I want to see us stay heavy. Can we rip through that and continue to blast through it with a lot of momentum? I don't want to see this as like a turtle soup, meaning I don't want to see us take out this low just to continue higher. I want to see us get heavy in here. Let's see, stop loss just above this up close candle. That may be a little aggressive, but I do want to see us stay heavy here. Again, I don't want to treat this as a turtle soup, so if it's good, NASDAQ should stay heavy. Because ideally, if you're bullish, what do you want to see? You want to see us take out a low and then displace higher, treat that like a turtle soup, but in this scenario, I'm looking for sell side down here. So we have this up close candle, treating that as a bearish order block, laying in the lower half of the breaker. I like to see that offer resistance. I really don't want to see us trade above this candle's high. Alright, break even, no biggie, and I'm actually still in the trade on my personal account. So I'm going to go ahead and switch brokers and we'll manage the trade on my live account from there. I'll be right back. Alright, we're back. This is my personal account. If I can manage to do that. Okay, live funds. When I stepped away, didn't get the chance to copy a trade. I be telling them, don't copy my trades. I got, excuse me, I got a lot of complaints because I stepped away from the charts yesterday, and I guess people who want to copy my trades, they expect me to trade every single day. Yesterday was garbage. Like yesterday was actually trash. I'm watching mean threshold of the breaker. So, live account, I did up my account size. I need some water. I always forget my water. But I did up my account size so I can trade one mini contract now, which is nice. So that's why the P&L is a little bit more, it's a little up there. I'm watching the bodies if we can respect mean threshold of the breaker. I like how this candle closed beneath it. But again, I'm still expecting speed, or rather I like to see speed because I don't want to treat this as a turtle soup to go higher. Remember, we're talking about this fake bull flag here, displacement, consolidation. Retail wants another displacement. I like how we just ran over the top of them. So I don't want to really bail them out by working higher, taking out this high. Like I want to drag them across the coals and just continue working lower towards sell side and the opening range sell side. Opening range sell side and original consolidation. Again, I'm watching. All my focus is in mean threshold of the breaker. And then we also have this fair value gap here. If I can draw it. Make this line a little thicker. And draw that forward. So I'm still looking for a meaningful close beneath this low. I like how the bodies are staying below the fair value gap. We're also in that lunch macro. London close macro, I mean. So, London macro, if I'm asking myself who's been making money all morning since 9:30, well, that, in my opinion, is pretty self-explanatory. This is our 9:30 open on this candle here. Who's been making money? Well, we have this short-term low, which hasn't been taken out. We have this short-term low. And the way I view it, we've already done a damage on the sell side, or a damage on the buy side, rather. This high taken out, relative equal highs here, taken out, break lower, trade up. Okay, I'm treating this as a smart money reversal in your market maker sell model. So we've already taken out high, high, relative equal highs. Okay, failed to take out this high here, rotating lower. So sell side liquidity underneath this low, and then sell side underneath this low here. Using the time element of the 1050 to 1110 macro, which runs on liquidity left on the table, looking back no later than 9:30. I use TradeStation for my broker. So my stop loss has moved at break even, $20 locked in just for the sake of spread and commissions and all the extra fees and all that. So risk-free trade, aiming for about $2,300. No prop firm, personal funds. Okay, wicks or gaps. We have this wick here. I want to see us dig into consequent encroachment and completely overlap it. Okay, if I'm bullish, I would be expecting this wick to send us higher and act like a normal fair value gap. But in this case, since I'm bearish looking for sell side and a return back to the original consolidation, I want to see us get below this wick and treat it as resistance, treat it like a premium array. Let's see, this candle's low, 577.75. We can take off this 10 a.m. opening price since it is 11 o'clock. Same thing with the midnight open. I don't really care for it once we reach 11 o'clock. Midnight opening price is really only relevant to me, in my opinion, no later than London close. Trading back up into that fair value gap in the premium range of the breaker. All right, stop that break even, a little bit in profit. Last attempt for the week, re-entry going short, targeting the same opening range sell side. Looking for a lot of speed underneath this low. We have this fair value gap here, this BISI. I like to see us get beneath that, treat it as resistance. No, not full port. Not full port. That's not what we're doing. That is not what we're here to do. Dow looking really bearish. Just took out sell side. Crazy. Dow's looking really heavy. Here's the Dow. Really heavy, really bearish. NASDAQ, I like for it to match that energy of the Dow as far as the bearishness. But the Dow's gone. The Dow's out of there. That dirty 30. That dirty 30 is crazy. I used to talk trash about the Dow and people who trade the Dow, but when it moves, like, it be moving. I can't even knock it anymore. Like, it's not that bad after all, I guess. This is my last trade for the day. Normally I don't take 2 trades on Friday, but since the first trade was a break-even attempt, only like $20 or whatever, I'm fine using a re-entry and technically counting this as like my first trade, if you want to see it that way. I'm watching to see this candle disrespects consequent encroachment at fair value gap. Don't like that close above it. So if the trade is still good, the fact that we're trading the premium end of that fair value gap, this is when, if I'm on side, it really has to start running here. If not, then that means I'm offside, obviously. And I am looking at those 1 minute equal highs. Waiting. As far as risk, if NASDAQ can manage to take out this swing low, then I'll move my top to break even. I'm watching this fair value gap still. I like to see us get below it, treat it as an inversion level. It was used as support here to take us up above this short-term high, but I like to see it close below it. Next candle open, trade up, treat it as resistance, take us lower into this fair value gap in original consolidation. Webinar is Saturday. Okay, I know we had, like the past couple of weeks, our webinar has been jumping around from Saturday, Sunday, Saturday, Sunday. Our webinar is back, regular scheduled programming, 10 a.m. tomorrow. I'm thinking the first half, the first 30 minutes of the webinar is going to be like risk management, psychology, trade management. Since this week has been a little bit more difficult, I think I want to cover how to handle losing streaks as far as lowering your risk and your trade frequency and all that stuff. So we're going to cover that tomorrow, and then the second half, maybe like a weekly recap or back testing. I don't know if it's going to be back testing or just like a weekly recap of the price action morning session. I haven't decided yet, but that's what it's looking like tomorrow. Yes, 10 a.m. tomorrow, 10 a.m. New York time tomorrow. Yes, sir. I want to see a lot of speed underneath this low. And just like when we were trading down here and I was watching consequent encroachment of this wick, I still like for that to get disrespected. Closing. Didn't see the signs that I like. Love y'all. Webinar tomorrow, 10 a.m. I'll see you there. If you're still trading, best of luck to you. Don't gamble. Don't do too much on a Friday. Okay, don't be putting in 15 trades on the last day of the week. All right, if you made profits, cash out. Go enjoy your weekend, and I'll see you tomorrow. All right, peace.